Welcome back. Well, an improved second half bolstered Motus's overall performance after a first half marked by global economic uncertainty, high interest rates and intensified competition. The automotive group says focused management actions targeting sales, margin recovery and operational efficiency in the second half drove a significant turnaround. Motus CEO Ockert Janse van Rensburg joins us now for a look into the year that was, and a pretty interesting year, Ockert, because I actually saw different growth dynamics in your financial metrics, and quite notably softness, a little bit of softness on the top line, but 5% growth in the bottom line. What story are we looking at here?
Yes, I think, and good afternoon to you and your listeners. I think what we're looking at is obviously a much more resilient performance for the full year, but if you go and unpack it, you will have seen that H2 was much better than the first half. I think we had to really do some heavy lifting to try and get to that. And I think what has really contributed is the fact that we've got such a nice diversified business. So if all pieces of it work together, you can get a better end result. That's probably what you have seen. I think the most other notable one, which a lot of the investors have been commenting on today, is the fact that we have reduced our net debt position quite considerably. And it's also culminated into a nice reduction in our finance cost of 13%. And that's how you get to the HEPS of 5% up.
Heavy lifting by the company, of course, but still operating within an uncertain and unstable macroeconomic environment. In the results commentary, there's a highlight there on consumers buying down. And let's contain it within the South African context. What has been the impact then of that on new vehicle sales and in the pre-owned market?
Yes, so what you would have seen, and even just looking at our result, is that we do still have strong volume growth. Our new units, if you look at that first, did go up by 8%, but yet you would see the revenue didn't quite portray exactly the same if you just look at new vehicles. So that immediately directs you to the fact that people have been buying down. So you have seen lots of activity, but people are buying down. I think affordability is a key issue for consumers that's a little bit under constrained circumstances. But at the same time, we are grateful that the consumers have returned back to the dealerships. I think you would have seen it was quite tough even for a number of years. But we are now, you can see that there is a bit of a replacement cycle that's taking place. I think the fact that there's very little price inflation on vehicles, so vehicle price inflation for the last year. So the fact that that stayed stable, interest rates coming down slightly, probably just gave that window of opportunity for consumers to then go ahead and do the purchase. And you probably have seen the same with the pre-owned space as well. I think affordability is key, but at the same time, you also need people who need mobility. If you've got a job and you need to be able to move from point A to point B, vehicle is unfortunately key in that arena.
Looking at obviously the impact of the buying down going into the pre-owned market, but also you talk about that longer replacement cycle. Does that now flow into the aftermarket part division? How much of that have you seen?
Yes, so in recent years, we have invested heavily into that aftermarket parts area of our business, that segment doing very well. And you can see, the robust performance we had there, both locally as well as internationally. And that does talk to a replacement cycle that's moved out a bit. So people holding on to their vehicles for longer. And that's where we've been able to get good volume growth, also good margin growth. And the margin growth there is almost coupled with the volumes, as there is a portion of fixed cost which sits there when you distribute these parts across the country. And you would immediately get the benefit if you're able to pick up the volumes as well. So a lot of operational efficiency has gone into the margin side, but we're quite pleased with the volumes. Now, the volumes have got more than one side to that story as well. We've also been able to move into more of the informal settlements where we were not before. I think that is a part of the business that we try and grow, and a difficult market to crack, but at the same time, it looks like we're getting good traction on that side.
Yeah. Due to, of course, the shifts in consumer affordability, then consumer behavior has encouraged new entrants in South Africa, particularly in new vehicles. How's Motus defending its position in the market?
Yes, it's quite difficult if you have all these new entrants coming in the whole time. And as you would have seen in the results, we still managed to sell 1 out of 5 vehicles. So a 20% market share on passenger is a difficult position to continuously defend. I think we've adapted well. I think we've had to also adjust our offerings to meet what the consumers' demands are. Consumers' preferences have moved to maybe more of the new entrants, so the Chinese, etc.
Yeah.
And we followed suit. We have opened up a lot of our dealerships also to new Chinese entrants and those brands. And I think our offering is reflective of what the consumers want, and that's how you're able to still stay, ahead of the game.
Yeah.
Also, in the last month, we've also been able to launch Tata, which would be a new brand in the country. So that one we'll be importing ourselves. And that's also playing into the entry-level space, as we just spoke about now, where we think there's more activity. And that would be another area where we think we'd be able to defend our market share position.
Let Tata take you there. That has been on my timeline on all my social media platforms. I want to drill into the rental market as well, because you also highlight there the increased competitive landscape in that rental market. What does that look like, and is there still untapped growth?
The rental market obviously has lots of players there. Competitiveness has always been in that space. I think you've got large competitors in there, but we all have found our little niche markets there. I think we're still very pleased with our results. Revenue growth of 6%, operating profit up 6%, which tells you we have been able to focus on the areas where we believe we can get the maximum out of those areas. Obviously, the international tourists still coming to South Africa, mainly Cape Town, unfortunately. Looks like they're staying away from Durban for the time being and more into Cape Town. But the reality is that Cape Town market very active. We were able to upfleet during the times when it was the busy period. Now we've defleeted again. But we're quite agile in that space and believe that we are got a good management team running that business.
How agile are you able to be right now in the UK? Because there seem to be a number of factors putting dealerships under strain in that market. Is it difficult to navigate at this point in time?
Yes, the market in the UK has been softer. We've certainly seen on our passenger side, it's been tough going there. We're a lot more into the commercial truck side of the business, and that part of the business has been performing still very well. It's quite a resilient business. But even there, we have taken steps to, change our profile a little bit. And we have, in fact, sold our Mercedes truck and van business in the UK in the last 6 months, feeling that we needed to reposition ourselves more towards the DAF trucks and less on Mercedes, because that's where the market is. DAF has got a 30% market share in that UK market, and we've got quite a strong market share of that, close to 20% of the 30. Wow. So that's where we want to focus on, and maybe a little bit focus less on some of the other areas there.
All right. Well, thank you so much for your time and giving us more detail on the year. That was really appreciate your time, Ockert. That was Ockert Janse van Rensburg, CEO of Motus.